In this new segment of Advisor Revelations, the DPL team will discuss how to evaluate new solutions and address current challenges and the strategies that can help you grow your firm and AUM.
Welcome to this edition of the Advisor Revelations podcast. I'm your host, Ross McGoodwin, Regional Vice President of Member Success here at DPL Financial Partners. Today, I'm joined by Blake Reitnauer, who is one of our membership consultants here on the team. And today, we're going to be going through some different updates on the platform as it pertains to opportunities within this market, new solutions and new strategies that are available through the platform at this point in time, and brand new services that we think are going to be really interesting to the audience, whether you're already working with us or maybe you're considering working with us for the first time. So today I'm joined by Blake. Blake, why don't you chime with a quick introduction to your side?
Yeah. Thanks for that, Ross. Great to be here, and great to be on the DPL team. Like Ross said, membership consultant, here to help really walk firms through due diligence on why they should join DPL and how we work with RIAs to help them grow strategically. And so that's kind of where I'm fitting in here on the team.
Excellent. Before we get into the meat of the topics today, I encourage everyone to check us out on the website, dplfp.com, and also subscribe to this podcast moving forward, wherever you get your podcasts for the Advisor Revelation series. So as we get in today, Blake, appreciate you joining actually for the first time. So it's great to have more of the team members part of the discussion and getting your voice out to more of the advisors. So just to kick things off, right now, there's a lot of different, I think, questions as it relates to the market and going into the new year. How is this going to affect the landscape of annuities and what we're providing for advisors? With regards to interest rates and volatility, what are some of the conversations that you're having with prospective members right now that are driving interest or maybe could be timely going into 2024?
Yeah, sure. So a lot of talk around fixed income. People really talking about where yields are at and whether or not they can find anything better, and really trying to take advantage of where some rates are for guaranteed income products. So more and more advisors are starting to realize where the opportunity lies and wanting to kind of get in, why things are going really well right now. So driving lots of interest from that perspective of just the interest rate environment we've been given. So that's kind of where things have been at recently.
So yeah, it's really helpful to understand. So in regards to the interest rate environment, how does that manifest itself into a more competitive annuity solution? Why don't you touch on that a bit from an income and protection standpoint?
Yeah, sure. So just what the carriers are able to do, especially for retirees getting to around age 70, where we're seeing payout rates around the 8%, 8.5%, if not higher. And comparing that to where maybe corporate bond yields are at or where treasuries are at, you're finding much more alpha when you're looking at solutions that the carriers are able to provide right now. So just parsing off a piece of the fixed income portfolio and utilizing those solutions, advisors are finding much more value in the yield for their clients by utilizing those solutions.
So yeah, to your point, an 8% withdrawal rate is extremely competitive, or potentially 7.5% withdrawal rate for rising income for life. What this does is it allows an advisor to get more value out of the insurance company and take that much less money out of the portfolio to meet those non-discretionary expenses. So the rising income at times is actually beating what a client could currently get on a legacy annuity while obtaining a rising lifetime payment. So I'm sure, Blake, when you've been running the tool demos, that's been a big talking point, is the rising income right now.
Yeah, certainly has. Most advisors are shocked by it just from their, sometimes 20, 30 career, not really ever seeing anything like that. So we're in very unique times right now, and the products we're able to provide are really driving lots of value to end clients and really helping secure more retirements as a result.
Yeah, absolutely. And then from a perspective of principal protection, I think a lot of advisors have been taking advantage of what they're getting in the money markets and short-term treasury, short-term bonds as rates are high, which makes sense. However, I think I have seen in my own experience much more conversations towards, well, how do we leverage annuities to help with maybe looking at a longer duration or maybe looking at the fixed index space? How have those conversations been as it relates to principal protection and How can an advisor take advantage right now?
Yeah, sure. So, talked to many advisors even recently where, clients' equities have been winning for them for a long period of time. And so while they still might want to be tied to the S&P 500 or equity indexes, we can look towards solutions that'll give them that same exposure, but with some downside protection. So I've seen a lot of advisors looking at FIAs where they can tie it to the S&P or tie it to different equity indexes, but have the 0% floor and have a cap on the upside. So really just taking off more of that standard deviation of, fully being exposed to equities and within sub accounts. So taking some chips off the table, but still letting clients invest in those indexes that have done them well for so many years, just with some more backstops in place.
Yeah, and it works nicely as a bond alternative, right? Because now you are looking at a floor of 0, perhaps on an FIA with S&P exposure, but that cap could be as high as 13.5%. We know that rates can change, and they will change by the time either good or bad by the time people maybe eventually listen to this down the road. But the point is that these are the highest rates we've ever seen for these types of principal protected solutions. So being able to accomplish a double-digit return with no downside is really powerful as a bond alternative right now. And then what about the MYGAs? I think those have also been extremely popular as of late. What are you seeing with those as a opportunity or as a nice comparison point in the portfolio?
Yeah, I mean, it's just, especially for people who are newer to the annuity space, it's the most comparable product to, like what people are used to. Basically operates like a tax-deferred CD, looks like any other bank CD, but it's an insurance product. But it's going to operate the exact same, except you get the additional tax-deferral on top. Going to be a fixed rate, going to get that guarantee rate for a fixed duration. It's just easy to understand. So a lot of people who are dipping their toes, especially when we're having new conversations with advisors who have never really used these products, it's a really good way to dip your toe in the water and get used to annuity type solutions while still getting a better yield than other products that are out there.
Yeah, I think it's a common misconception. All right, annuities, that means complexity. It can get as simplistic as you want, and that's where the MYGA fits, where there's no moving parts. You know exactly what you're going to earn. You look at the credit quality of the carrier. You look at the duration, the rate. We even have ones with no surrender periods with a couple carriers, which is really interesting. So this really can be as simple and transparent, as liquid as people would like it to be at the end of the day. So that's, I know, been a really nice opportunity for our current members and the prospective members who are checking out the platform. That's always an easy starting point. So we look at the whole membership. Clearly, there's been a lot of demand, a lot of urgency for advisors who are seeing the opportunity to leverage this environment to capture strong payout rates or access really competitive principal protected solutions. But what are some new services and new stories that you're telling for some of our membership conversations? What's been maybe a new offering that has made those conversations easier?
Yeah, so with the addition of the breakaway accelerator program, that new service has made conversations much easier. When we're working with advisors who are on the fence about breaking away or advisors who have already made the step to break away, when we're able to talk about how we can transition, that entire book of annuities and insurance, maybe not just the ones that we could 1035 exchange initially, it just helps makes that process much more seamless for advisors who are making that step. So that's been a great addition in services and have helped drive a lot of demand for membership and more business for DPL.
Yeah, no, I think it's been a game changer for a lot of those conversations. For years we've been working with firms about looking at exchanging their book of business, but they have a potential larger issue than just looking for 1035 exchanges. Although that will be a huge opportunity and that will be the best case scenario, there are contracts out there that maybe don't make sense to exchange right away, or they might have a breakaway date where they need to make a clean break and clean sweep and bring over everything from a control standpoint as soon as possible. So that's where adding this service has been, I think, extremely beneficial for our conversations to bring the most value, but for helping advisors to have the confidence that they can finally move to fee only and their clients are not going to be left behind in any capacity. So if anyone is in this situation, Blake, what does the process look like? What do we typically need to understand if someone's a good fit, and what are the steps that usually look like?
Sure. Yeah, I would just start by, reaching out. You can fill out the DPL contact form, calling DPL, really just to get the conversation started. But from there, it's really just filling out we have a breakaway accelerator program spreadsheet, and it's just inputting contract information, really filling out what that book of business looks like. And then our transition team from there is able to do an analysis of what the book looks like and really determine, through the analysis, what is available to 1035 exchange and what is available to go through our breakaway accelerator program. We can really work, hand in hand with the advisor to walk through what a transition would look like and help them make that breakaway much easier when they take that step.
Yeah, and what's changed and why we're able to offer this on a wider scale is that we have partnered with a team in Texas that specializes in providing agent changes and really spearheading that process. So we work with them in tandem to be able to really transition the servicing to DPL, but have everything handled in one easy process. And we have appointments with really all the big name carriers out there that typically outsource distribution. There can be exceptions for sure, but we have a lot of the big name carriers as part of this network. And as Blake said, if anyone has a book of annuities, we can audit it to see which ones would be compatible with the agent change process. And of course, we'll go ahead and let the advisor know which ones we can exchange, whether it makes sense to go ahead and do it now, or once it has moved over to our servicing, look at making the exchange at the appropriate time. So I definitely encourage everyone to reach out to learn more if that fits your situation. Now, in terms of looking at the insurance space, for years we have been clamoring for a growth in the insurance space, outside of annuities and providing more strategies. Why don't you tell everyone about the life insurance desk that we've built out over the past year and a half?
So the addition of the life insurance desk has also been, a great factor in helping us grow and just service advisors to a much higher level as we're adding out services. It was Amy Arnett, who we brought on, Director of Insurance Solutions, and have built a team under her now where we're pretty much able to work with advisors on anything that comes up in terms of insurance with their clients, whether a client may own some insurance policy that they don't know much about. It may be confusing, may need some help figuring things out, or maybe you're looking to place a new insurance solution and want some help on deciding what would be best. Whatever it is, Amy and her team are able to work through, individual client's case and really help through case design and figuring out, whether or not we can transition from their current policy to a better one, or if they're looking for a new one, really figure out what's best depending on that client's specific needs and unique situation. So that's been a great service to help just serve advisors and their clients to a higher level as we're building out our, different service offerings.
Yeah, absolutely. And, I think the big thing with the life insurance desk is continuing to maintain control of the experience, but have DPL really solve for as many of the problems, but in many of the situations you're going to come across. So you don't have to introduce additional parties or additional contacts to get everything done holistically. We can solve more and more for this under one roof more than ever. So that I know it's been really exciting for firms when they join with us to have us solve all their term or long-term care needs or whatever it is they may be coming across. Now, in terms of the opportunity within the 1035 exchange process, we talked about how the interest rate environment is making things more competitive than ever. We've talked about how, from a principal protected standpoint, the rates are really competitive. But from a general planning process, are there any new strategies that you think this year have become most interesting, maybe across the buffered space and the way there's been growth across those types of solutions?
Yeah, just, like I mentioned earlier, there's a lot of clients out there who have been heavily invested in equities and they want to keep with those same allocations, but they've been given new solutions in the way of buffer annuities to be able to keep those same allocations, but take some chips off the table in terms of risk and get some downside protection. Just still keep with the same strategy, but much better solution in terms of hedging more of the sequence return risk as they transition into retirement.
Yeah, I saw the advisor the other day, and they were a big fan of the dual step up strategy on the S&P on just a 1-year commitment, because let's face it, over the next 12 months, we are looking at some uncertainty. You have wars going on. You have an election year coming up. Election years typically can be volatile, or they can at least bring some uncertainty into the mix. So having a solution that potentially could pay a client a double-digit return as long as the market returns negative 10% or higher, and that's all the way to infinity. Having that defined outcome, I think, has been a peace of mind for some folks out there, and giving clients an opportunity to say, well, as long as we're not down 10% or more, at least we can lock in a double-digit return. And I think a lot of advisors are anticipating we might be slightly up, slightly down, but they don't really know. That's where this has come in to provide some predictability in the event that we are on that type of defined outcome. So the buffer annuity space, super interesting now. New strategies becoming available at more carriers than ever before. And definitely encourage everyone to reach out if they like to learn more about that unique strategy there. Blake, anything else that you're talking about with advisors that's been timely, or something that you think maybe the audience would like to learn about that maybe we haven't covered thus far?
Yeah, sure. So a big theme we've seen this year in terms of membership and due diligence conversations with RIAs is, especially with the M&A space being very active in the RIA space, there's lots of advisory firms that are looking to acquire firms or bringing on new advisors that, could have been from a wirehouse background. If you're in the middle of acquiring a new firm, adding any new advisors that are coming with a potential book of business in terms of annuities or insurance, DPL is a great solution to be able to have in your toolbox for acquisitions or for adding advisors. Like we've talked about our breakaway accelerator program, we're able to analyze those books of business for a new firm, a new advisor you're bringing on, and really help transition those past assets into AUM for the firm that they're going to be joining, your firm. So really encourage any advisors who are acquiring firms, bringing on new advisors, to reach out to DPL, reach out to us and see how we may be able to help make that transition easier and, bring some more AUM and revenue on the other side of that transition.
Yeah, I think it's a good topic to bring up in general, because we work with firms that are either adding new advisors left and right, or maybe they have a roll-up type structure. They're bringing on new offices. So that's where the Breakaway Accelerator program could be huge, because usually a lot of advisors that transition are to a new firm are maybe coming from wirehouse or broker-dealer firms. So something I want to be really clear on is that we do have a path to potentially add the advisor as a sub-advisor on the policy, and then we can actually pay the firm to manage the assets for us in the form of a sub-advisory payment through the Breakaway Accelerator program. So this is something, of course, that we can talk about in greater detail after looking at the book of business. But that control of the book, and then not giving up all the revenue on trails on legacy business, I think is a hugely important aspect that cannot be overlooked. So I do think the M&A activity goes hand in hand with what we can provide through the Breakaway Accelerator program. So not only are the solutions becoming timely, and we're seeing growth in terms of interest on the strategy side, but we've seen a lot of growth on the technology side. It's great to see that there's nice solutions available, and we can better serve clients. But as an advisor, and for advisors who are running a business, the technology aspect is super important. So you'll see that we've continued to really focus on partnerships in the technology space, whether it's an Orion or a Black Diamond. We're working on building out more data feed capabilities and helping these solutions to live in the advisor's day-to-day desktop. Blake, what's been different, or what has changed in terms of the DPL Everywhere website and what we're providing for advisors right through the DPL site?
Yeah, so just with the addition of things like application management, being able to see contracts that are being placed, it pretty much acts like a Domino's pizza tracker, to keep it simple. You're able to check exactly where a contract may be in at any stage of origination to closing, and able to provide kind of live updates to the client. Because we know previously annuities and insurance, it's very opaque in terms of the details of where things are at. So being able to give live updates on where things are at is a huge development in the annuity and insurance space. And that's what we're helping to drive, is really giving high touch updates on, contract details, policy updates, and things of that nature. That's been a huge addition to the DPLE software. I'd say also just, in terms of data feeds and, building out that space more and more, something that goes largely overlooked is being able to eliminate third-party aggregators. When the DPL Data Hub is able to integrate with the portfolio management software that your firm is utilizing, you don't have to anymore utilize the third-party aggregators like the buy all accounts and DST fan mail, which are an extra cost to the firm. Having a direct feed from DPL to your portfolio management software eliminates that cost completely. And it's usually an ancillary benefit that firms hear about, but it's largely valuable once they realize they can get rid of the third-party aggregators they've been working with for so long that sometimes break and are very unreliable at times.
So we talked a lot about how there are really timely strategies on the platform, and there's been urgency with advisors to work with DPL to help their clients find the absolute best solutions while times are good. Income is strong, principal protection strategies are really competitive with high rates. But we've invested a lot into partnerships and into technology. We continue to look at partnerships on the performance reporting software side, on the CRM side. We know that as advisors, it's great to have strong solutions, but if you can't properly monitor it or manage it, it's not going to do you a bunch of good at the end of the day. So ultimately, we've been looking more and more into how can we partner with the likes of Black Diamond, or have a direct feed to Orion, or give advisors a centralized hub through our website to view everything in one place. So Blake, tell me about what we're doing to change the game from a technology perspective in annuities and insurance.
Yep. So great tools in terms of the annuity comparison calculator. So any of those existing contracts, firms like to use it as a prospecting tool. When they have a new client come in the door, they may have an existing annuity. And, it's a great way to, within a few minutes, run a comparison on what that client owns and see if there's a better solution through DPL, depending on that client's goal to get them in a better situation and improve that outcome overall. That's a great tool. Also, the Explore Guaranteed Income tool is a great way for a client who may be an existing client coming in the door, and you're trying to plan through retirement income strategies, and a great way to look at what income options could be if there isn't if there isn't enough portfolio income coming in, being able to look at guaranteed options to provide that income stream for the client. And a couple ways you can run that. There's a needs-based analysis where you can pretty much tell the calculator how much of a gap there is, in terms of the income needed for the client. And then we can reverse engineer the amount of premium needed to provide that in a product. And then also you may just have a lump sum earmarked and say, how much can we get from this lump sum? So that's a great tool as well. The last one I'd say is our fixed income comparison calculator. And so it's a great way for advisors to maybe compare a client's current fixed income allocation and see whether or not there's some efficiencies they can create by, taking off a sliver of that to utilize in a guaranteed income solution. So really just being able to compare a client's current allocation to what may be possible to improve that situation more.
Yeah, those are all fantastic. And one other one I'll add is we just have the Explore Annuities by Goal. If you really have a problem you want to solve, but you're not exactly sure what the end result should look like, that's a great starting point. Hey, I'm looking for complete principal protection. We can't lose money. What are some options we should be looking into? We'll stack rank the options based on the criteria you provide. Or, of course, if you're looking for income, there's great solutions there. So Explore Annuities by Goal is the most basic starting point. But to Blake's point, those other tools are fantastic for giving advisors a chance to play with their own scenarios and maybe have a little bit of an idea before they come to the table working with DPL to really finalize the strategy. By all means, everyone feel free to reach out to your DPL consultants at any time, but having those self-service tools are great just to give advisors more resources and help them really have more just education around what's possible and how we ultimately typically are going to narrow in on the right strategy at the end of the day. Well, Blake, sounds like there's been a ton of positive energy going towards technology, our website, and the new solutions. I know we're really excited for what's to come in 2024, and I hope advisors are excited as well to network with us, figure out how we can best partner, and looking forward to what's ahead. So, Blake, thanks for joining the podcast today.
Yep. Thank you all for having me on. Appreciate it.
And I'm on the audience once again. Thank you for joining us, but please check us out at dplfp.com, and please subscribe to the Advisor Revelations podcast wherever you get your podcasts. Thanks so much.
Thanks for watching. Visit dplfp.com to learn how we can work with advisors like you. And please, for more updates, subscribe to this channel.